Every day, enterprise telecommunications and subscription services generate millions of individual consumption records. Calls, data usage, and recurring fees create a massive, chaotic influx of raw transactional data. To turn that raw data into accurate revenue, SAP S/4HANA BRIM uses the convergent invoicing document flow. This system acts as a highly structured sorting mechanism. In this tutorial, we will track 3 specific phone charges, 2 for data, 1 for voice, and run them through a strict 4-phase transformation. We will follow them from creation, through execution and document generation, all the way to post-billing. Mastering this exact sequence ensures that scattered usage data is reliably converted into clear, auditable customer invoices. Step 1 is creation and storage. As consumption data arrives from external rating systems like SAP Convergent Charging, it is stored as billable items, or bits. Each BIT contains the main transaction details, along with any optional tax or payment data. This table displays the 5 statuses every billable item navigates, entering as status 0, raw, to status 4, billed. The billing run ignores raw or accepted items, only selecting items validated as status 2, billable. For our example, we are looking at a specific customer, business partner 001, tied to contract account 001. They currently have 3 charges, 2 for data and 1 for voice, all holding that critical status 2. When we check the Display Billable Items application, we can look at the status column to verify that our 3 specific charges are indeed marked as billable and ready for the next phase. Ensuring your items achieve this billable status resolves the most common reason automated invoices fail to generate. Now that we have validated our items, we move to phase 2, execution. The system initiates a billing run, scanning the database to select all eligible status 2 items. Once selected, the items undergo grouping. This step determines exactly which individual charges will share the same final customer bill. By default, SAP groups items sharing 3 attributes: business partner, contract account, and billing subprocess. Since our items belong to business partner 001 and contract account 001, the sorting mechanism gathers them into a single container called a billing unit. The grouping process creates the organizational envelope. It sets the boundaries for the invoice without altering any of the underlying transactional data. While grouping builds the envelope, aggregation organizes the contents. Without aggregation, high-volume services would produce 1,000-page invoices listing every single microtransaction. To prevent massive invoices, the system inspects our billing unit for identical billing item types. Items A and B, both data usage, merge into a summarized €80 line item. Item C, voice usage at €25, doesn't match, remaining a distinct standalone line. By combining similar charges, aggregation keeps the final invoice readable for the customer while retaining perfect mathematical accuracy. We are now ready for phase 3. The system takes that calculated billing unit and formalizes it into a concrete SAP billing document. Looking at the document header, we see the highest level information, including the total calculated amount of €105. Moving to the document items section, we see our 2 aggregated lines, the €80 charge for data and the €25 charge for voice. When combining data, a common concern is losing the specific details of original transactions. SAP anticipates this, preserving the complete audit trail. By clicking the Source Items tab, you view the direct link back to the original 3 unaggregated billable items. This dual-layer structure gives the customer a simple, consolidated view, while providing finance teams with the exact transparency they need for an audit. We have reached phase 4, post-billing. Immediately after the document is created, the system runs 2 automated back-end tasks to keep the database organized. First, it updates the original 3 billable items, changing their status from 2, billable, to 4, billed, ensuring they aren't processed twice. Second, the system automatically generates an invoicing order, or INVBI, queuing the document for the next major process. This back-end cleanup step bridges the gap between the billing engine and the final posting into financial accounting. Let's review the progress. We started with scattered, high-volume consumption records. We verified their statuses, grouped them by customer account, aggregated the lines for clarity, and secured the original data with a complete audit trail. Our €105 billing document is now perfectly staged as a ready invoicing order. In the next tutorial, we will take that order and execute the invoicing process. We will generate the final customer-facing invoice and post the receivables directly to Contract Accounting, or FICA. You can find additional documentation on configuring custom grouping variants in the description below. Subscribe to the channel to catch the next step in our S/4HANA BRIM series.